Good morning, everyone. It's Friday, August 2nd, and today is a big day because of the jobs number. And so we'll have to wait at 8:30 a.m. Eastern Time to see how that goes. But yesterday was a very bullish day, and the S&P has crossed the 1700 mark, the big round number. So things are looking bullish. If the jobs number comes out good, then I think this bullish sentiment could continue for the rest of the month. So let's take a look at our trades, and there's a few adjustments that we may want to do based upon what happens this morning. So on the FedEx trade, as you can see, we have an iron condor, but FedEx was very strong yesterday, pushed up to $110. So we might want to make an adjustment here as well. So something, the way we would look at FedEx would be perhaps buy a call option to well, this one expires today, so maybe into the next week we might want to buy a cheap call option. So let's say we have our short at the 115 level, so we might want to buy just the 115 of the weeklies itself and see if that will that'll be sufficient. So that's what we will do for FedEx. Let's take a look at Google. Now, Google, we have, if you look at the profits monitor screen, we have the shorts at 830 and 820 and 950 and 960. So Google's pushing up slowly as we expected. It's gone up to 905. So you can see we have a profit on the bull put. We have a $1,400 profit. Also, if you look at where Google is, 830 is too far away, whereas 950. So we would want to bring this closer. So we'll book the profit on the 830, 820 and bring it in. So which means let's say 850, 840. So that's what we would do. We would open a new bull put at 850, 840, and then that would be somewhat equidistant to Google. Then we can manage that trade. Goldman Sachs is doing well on the bull put. You can see it's showing a big profit. I think there might be a closing print error here. This seems too large a profit. So we'll see after the market opens. We'll see what happens with Goldman Sachs. Herbalife is something that we should take care of. So we started this out as an earnings trade. And what I'm thinking is ultimately, if we wanted to get this Herbalife position under control, then we would want to keep the 55 put, the short put, and we would want to have a 75 call. So which means, Herbalife is right in between that. So a short call at 75 and a short put at 55. So which means then we just have to make sure that the other strikes that we close come somewhat equal. So for example, if you look at the 4 call, this is up $500. If you look at the 67 call, this is up 1100. So totally about 1600. And we can close this 55 put, which is has a loss of 1800. So today, if Herbalife goes up a little bit, I think these three will equal out. So we can close out those three, and then we'll keep the 55 put, and we'll move the 65 call over to the 75 call. Whatever loss we take here will be recovered from the 75 call. So that's something that I'm thinking of, but I will be sending a detailed email on that. But we would probably want to close out this, this, and this together for an approximately even trade. So that would be the goal. Now LinkedIn is up $18, which is fine. Our short call is at 250, so we should be okay on this trade. We may need to do an adjustment, but not quite yet. We'll see how it goes after the open. Now on price line, our 890 put and the put spread will be doing well. So 890, 870. So I'm going to close that out, and then we'll deal with the other bear put at that time. So those are the trades. We're just going to be managing things, but most important, we'll have to wait for the jobs numbers to see how that impacts all our positions today. Thank you.